Well, first of all, again, thank you for coming. You know, today we are actually enjoying the beauty of being the second panel today because, you know, I have some good lessons learned from the previous ones, also the ones in the morning, and there is something to inspire on so that we can add to our discussions. Just, you know, for your benefit, this is gonna be more like a conversation, a discussion. We will not have presentation among us. Well, I will introduce very briefly my guests, my panelists here, the distinguished panelists, and you can really read their full bio from the website. Fortunately, we have 3 people here from, I'd say, different walks of life, you know, touching different parts of the fintech in their professional life. Well, I'll start from you, Kürşat. Well, the Turkish market professionals would know him. We know him as Kürşat from TradeSoft. He was the senior director, I guess, a servicing company to, you know, capital markets institutions like brokers and asset managers. But he's here also with his hat on a startup company, I guess, Invstr. It's a social, you know, social. You tell me, social company for finance, specifically, like the Facebook of finance, I call it.
Yeah, you know, Facebook and Facebook and Bloomberg combined finance.
Yeah, we're going to talk about it a little bit. Xavier, he's in FX business, I'd say.
It's been for a long time.
He's the partner for Starbright Partners, and now a CEO of a company active in FX margin trading called Finbert.
That's right, yeah.
Okay. I'm reading from the Turkish one. And Hakan, he's also an experienced Turkish asset manager, working in AKK portfolio management before as a strategist and asset allocation expert, I'd say. Now he's putting that expertise into robo-advisory role under a company called Zeka, and he's the founder of the company. You know, in fact, the best moderator is like the referee, you know, the less I really intervene, the better. You know, I will try to make them talk on their own, so that, and you know, we will get the maximum out of it. But I will try to, you know, help or put my own views as much as I can. What I really want to do for the audience, for the benefit of the audience, is really just to understand, you know, from a broader perspective on where we are in terms of usage of big data, algorithms, financial technology in the front end of the business. You know, in the previous panel and in the morning as well, we talked too much about the back office, middle office integration, but where we are right now, from the company's perspective, well, service providers' perspective, like, you know, brokers and investment banks, and from the investors' perspective as well. And then, you know, I will have some questions around some of the issues that I think needs to be addressed, and then I really like your thoughts on where it's gonna go in the future. But let's try to understand where we are right now, what we can do, what we cannot do, and talk about, you know, the issues around that, and then we can really go into the future. We have 40 minutes altogether. So, you know, try to be brief as much as you can, and then, you know, hopefully we're gonna have 5 to 10 minutes Q&A session as well in the end. So we have half an hour. Okay. So shall I start from you, Kürşat? Maybe just you give a wrap up on how do you see in your own world, you know, things are going on right now.
Yeah, we have 4 different buzzwords in the title of our panel. So most of them are related to trading technology. So let's first start with trading technology. And there are 3 important dimensions in trading technology. One of them is the data. You need some data to process to make trading. And the second dimension is speed. And the third dimension is the intelligence. Now, what we are starting to talk day by day. Up to now, the people were using their own personal intelligence to do their trades. But for the recent years, we have started to use some different type of artificial intelligences to decide on the trading ideas. And this has become the part of the trading technology. That's why we are using artificial intelligence and other type of algorithms in our trading infrastructures. And on the data side, actually we have lots of data on the trading side, especially in the intraday data place. We have lots of data is abundant, but it's not cheap at the moment. So new disruptions, as far as I think, are going to come on that area also, because anybody who wants to trade do some type of quantitative trading need lots of data, and they have to be accessing the data so that it becomes more democratized.
Is data cheap, expensive globally, or is it specific to Turkey?
Yeah, actually, this is not specific to Turkey. This is this is
Since
about
ufuk
all the
around,
countries
just-
because the exchanges have their a volume of their a portion of their revenue from the selling market data, because that's why it comes with a price. But recently we are seeing a lot of entities that were priced beforehand are free for everybody, including functionalities, entities, and commodities, a lot of different things, because this is pure information. If the information is spread out all over the place, then there will be efficient people, there will be people who can use this data efficiently. So it will be good to spread the data to the most remote places as possible. On the speed side, actually this is performed by hardware most of the time. If you can pour a lot of money, if you have a lot of data, if you can put a lot of resources, then you can have very, very speedy trading. And there are some classifications. The slowest one is the end-of-day trading, which usually the asset managers perform by the naming of rebalancing. And you can also go to day traders. They do day trades during the day by just watching the prices and some order book information. And the next step is the HFT, which you go to milliseconds and microsecond level. At that stage, you cannot do something manually, but you have to wind up a mechanism to do that. Usually the algorithms softwares that are running the algorithms are doing that. You can easily run HFT type algorithms on standard hardware. But the next level is the ultra high frequency, where you go into latency levels just like nanoseconds. There you have to use specialized hardware, and that depends on the money you have. Actually, this space is, you see, is governed by the technology, the infrastructure, and for algorithm side, for the algorithm side, the intelligence, what kind of intelligence you use, and for the data side, what kind of data you have to use on the trading. And on the hardware side, with the advances in cloud computing, the processing has become very, very cheap. And also on the processing side, on the intelligence side, for running the algorithms, you need some execution power, and this is also provided by the cloud infrastructures in a cheap manner. So those type of advances has created different fintech providers, apart from the traditional players in the market, to provide some means of providing market data, providing trading connectivity, or trading functionality, or trading intelligence. And I will mention about those when we come to the future part.
Okay, yeah. And I'll have some question on intelligence later on. Yeah.
Okay. If we come to the Turkey practice, a few words on the Turkish practice. Actually, on the speed side, we were very far behind competition 2 years ago. But after the BizTech migration to the new platform, we can compete with the other markets as well. So we can just see that from the day trading becoming impossible by manual trading, by manual executions. And there are a lot of high frequency and maybe ultra high frequency traders trying to trade in these markets, so that all consumes all the inefficiencies in the market. So the manual trading is not so possible anymore. We can see that. Also, on the data side, our exchange after the migration to the new platform the exchange is able to provide a lot of data, including analytics data, which you can reach with its price. And on the intelligence side, I don't think that in Turkey we are we are doing a lot of things on that side.
Okay,
on the intelligence side, there is a lot of room to go for the Turkish players, brokers, asset managers, and also the technology providers.
Okay, so we're still behind.
Behind the game.
Now, well, I'll turn to Xavier, and if I may, if you can really speak to the audience rather than to me, because I feel uneasy, you know.
Okay.
Yes, we are just having the discussion here. So maybe in the FX world, well, I'd say arguably, but maybe realistically, it should be the most efficient market, you know, given all the other underlyings and how big it is. So, you know, I tend to think that, you know, there should be the place where you have the most efficient or, you know, top-notch technology because, well, maybe money is there or because it's an easier product to trade, you know, you name it. So where we are right now in FX technology.
So taking a cue, in fact, from Kürşat here, data, speed, intelligence. Okay, so I like those three words.
And Xavier, if I missed anything on your career, please, you know, feel free to add. You know, if you
no, your Turkish translation was accurate.
Okay, that's good.
Okay, so on that, I would say FX markets is the biggest market in the world, but probably not the most efficient. Okay, the equity markets would be probably the most efficient from my point of view, because equities came first with the idea of co-location to go to the speed, for instance. They had this data available as well, and the FX market is also very fragmented, you know, split into so many different ECNs, exchanges, and this kind of thing, and also open to techniques which in the equity world are outlawed, basically, or straight illegal sometimes. Okay, so this, of course, there is a catch-up game going between foreign exchange and equity in that sense. And I used to say, I can't say that anymore, but I will. Something I used to say, something 10 years ago, that if you front-run an order in equity, you go to jail. If you do it in FX, you get a bonus. Okay, so these times are gone. So now, in fact, you go to jail as well if you do it in foreign exchange. But you can see that it took a while for the FX market to catch up. Okay, so that's where we are in terms of markets in foreign exchange. But yes, otherwise you have exactly the same trends that Kürşat defined before. So data, speed, intelligence. I would say in the order speed, data, intelligence, probably. Speed is what FX traders concentrated on starting 12 years ago. And now we are using as well FPGA technologies, and we are down to nanosecond reaction times, which may or may not be useful because, in fact, in FX markets, you have a trend which you see as well in equity sometimes, is that exchange or ECNs are trying to negate the advantage of technology, of speed, by having, for instance, randomized latency technologies and this kind of thing. And this, of course, creates the focus on the third part, which is intelligence. And there in FX, there is a huge focus at the moment on the algorithm, basically, that are being used. With perhaps the note that when you marry speed and intelligence, and you are trying to, say, burn an algorithm inside an FPGA card, it's better if your algorithm is as, you know, small as possible, basically. So it's not so easy to come up with an FPGA solution with an algorithm which is going to have a lot of parameters, like, for instance, keep in mind parameters coming from the past. So you're trying to have a Markovian chain type of solutions, if you can.
A simple one, like,
if you can.
Well, it's like, you know, the gene reproducing in evolution. You know, there are very simple codes that you can do it. Anyway, you know, I don't want to refer to some books. And Hakan, you want to say, you know, a few words around where do you see, and maybe you can, you know, of course we've discussed before, and I know what they're going to say, you know, to a certain extent. You can as well also touch a little bit on, as we stand now, you know, in terms of in terms of data gathering on clients, on investors profiling, you know, how does it work, you know, from the big data, maybe you can slowly step in, you know, to that front as well.
Actually, as an asset allocation guy, I'm a more believer of low frequency trading. So,
but you all need all at the same time, right? That's why you have a market.
Yeah.
You should have the long onlys, HFTs.
In terms of trading landscape, I mean, many things are happening at the same time right now. We see the emergence of artificial intelligence technologies and also quantitative strategies. And accessibility for such kind of technologies is very easy right now. You can just create an account on Quantopian. I guess you all heard of it, and you can very easily backtest your algorithms, write your own algorithms with basic coding skills, and this is where the augmentation of trading comes from, I guess. So there are like 200,000 subscribers of this site, and they received a huge investment from Steve Cohen, who's expert in pairs trading and long-short technologies. But as you said, we are a young robo-advisory company, and we are producing robo-advice technologies in Turkey for the corporates right now. And KYC and risk profiling is a very crucial topic for us, because when we look at, for example, private pension system in Turkey right now, there are more than 7 million plan holders, and profiling such kind of mass client is a burden for most of the companies. And are you going to be looking at their demographic characteristics or their lifestyle or etc.? But from our standpoint, where this is going is like people are right now using social media to check the lifestyles of investors. And this is a crucial step, because people are sharing everything on social media right now, whether they are expecting a child or they changed their job or etc. So there is a huge amount of data, what we call it as big data, but how we are going to process this data is a big question mark right now, and machine learning and AI are the necessary things that we're going to be using going forward.
Well, in fact, in the morning session, the bankers, they discussed a similar thing around that. They said banks have always had this big data available. Of course, with certain limits. For example, Ali Fuat Erbil, Garanti Bank CEO, gave an example around credit cards. The banks know where the customer is spending
the money, yeah.
But they don't know what the customer is buying at that instant. That information lies with the merchant. So they are also, in a way, there are unknowns around how to process and how much to process, and there are also some issues around privacy. Where do you need to stop, etc. Is it, ethical, to really partner up with merchants and try to understand what I bought, where I've been, etc. Privacy is a very sensitive issue there. Well, from that, maybe I should be asking you around, I don't know whether you were here, but the deputy chairman for the regulator, he had some questions, in fact, some of them that we discussed.
Yeah.
At the end of the day, yes, there's too much technology. We're trying to really ease our lives. In fact, to corporate service providers, investors, etc. But in fact, the basic question, from what I grasped, I have a list of 1 page. But the regulator said we want a transparent, fair, and efficient, and a market where people can have confidence. Does the growth or addition in technology bring that, or are we really diverting from that? He said.
Is he still in the room?
He's not, unfortunately, but I promised him I'm going to ask the question, and I'm going to pass the answer. So you can assume, he's around.
Yeah, but he's also an old friend of mine. We have met about 8 years ago in one of the brokerage companies, and he's also I know that he's also very interested in algorithmic trading and new technologies. and I was very glad to hear those words from him also. Let's start from the privacy side. Actually, from the professional perspective, the trading in the financial markets is a zero-sum game. That means that if somebody else knows how you're doing that, then you lose advantage. That should be the case. But when you look at the retail market in the world, all the retail people trading, their trades and their ideas and their decisions are not so significant. So they choose to share their trades, opinions, and everything, just like they share their social information. And so this also has changed how people trade, or there are some companies who are providing this type of social trading functionality, which people just go and trade, and they share all their trades, and the other people can see their profiles, their accuracies, how they trade, and you have the option to follow them, to see their trades, and you have the option to copy their trades in some of the platforms. And but in our regulatory environment, it's not allowed. So it is something done in the other parts of the world. But on the professional side, this is never the case. Nobody who is trading traditionally on the professional companies will not allow anybody else to see their trades. But on the other hand, they sometimes share information not officially, but non-officially. There is something known by a lot of different means. So this is a known subject. This is known. This is well known in the industry. So it's better to look ahead. If you're thinking of making those markets, growing the trading, growing the investments, growing savings, then we should be thinking of incentives for more people to be taking place on those trading environments. So one of the things to do is to target the retail markets, putting the professional side, professional trading environment aside. On the retail markets, the financial inclusion is also a buzzword that has been discussed all through the day and through the recent years. And we all see that financial inclusion problem in the capital markets also in Turkey. We are about 80 million in population, but only we have just more than 1 million investment accounts, active investment accounts. That's very low. When we look at large countries, big countries, they just go to 20 or 25% rate. So we have a problem with our investment environment and trading environment.
So would this new technology, help to increase inclusion while being transparent and being fair? So that's the question, in fact.
Actually, the technology is the mobile technology. That has been invented about 10 years ago or 10 or 12 years ago, and it has been drastically changing everything. So I also think that it's going to change the trading market as well. It started to do that. But when we think of HFT, you just try to think of you invest in servers, you invest in quants, you invest in machine learning software packages and put into place, and then you just set up a company and you set up an account. All the books about quantitative trading actually gives those steps to build a quantitative trading environment. But now it's changing. People are trying to start to trade from the mobile phones. In most of the companies, also in the brokers in the Turkish markets, the mobile trading channel percentage is really became significant, as did the web-based channels in the start of the 2000s.
Yeah, okay.
And so that means that people are used to trade in the mobile platform. What they want is just simpler trading. That's different than providing a trading functionality on the phone and providing the same functionality from the website. And on the phone, you have to consider a lot of different things because there are lots of limitations. And the fintechs and all the startups actually are using that region around the business that interacts with the user and customer. So the notion or the value add of the most of the new startups and new fintech companies are that area around the business which faces the customer and user, so that you can take more people to the environment, to the business environment. And
Can I
Yeah, please. Well,
can I interview or can I interrupt?
And I have a question to you, which brings to my mind, does the, man on the street, is he aware of what's going on? Or, is this really building further information asymmetry into the system? So maybe...
I was going to jump on that because, I would certainly agree, and I don't know the Turkish market so well, okay, but I certainly agree that mobile phone technology will actually attract more people to investing, which is probably good, and to trading, which is probably not as good, because there, what I would say is that as technology improves and goes on, the gap between those who know and those who don't know keeps increasing. At the beginning, it used to be speed, and then there's been various attempts, I mentioned latency randomization to say to even out the playing fields. But today, in fact, if you want to be a player in those markets, first of all, you need some funds. Okay, you have to pay for the data, as you mentioned before, for the servers. If you want low latency lines between London and New York, it can cost you $5 million a year now. So in fact, it's not for the small guys, and you have to take it for 5 years. Okay,
5 years.
5 years. Yeah, for a super low latency lines, it's $5 million a year, 5 years. So for that kind of price, you only can play in that market if you have big dices, basically. So that is increasing. So I would say that what I see is a growing exclusion, in fact, of the general public out of the trading scene, but not of the investing scene. Because you can invest, of course, in your stock exchange, for instance, if you believe in the economy in the country, and that naturally will bear fruits eventually. But the trading itself, it's possible, of course, to attract a lot of people who invariably, in my honest opinion, are going to lose money. In the retail trading sector, we know that 95% of the customers put something like $5,000 at the beginning, and after 6 months, basically, they have lost about 80% of that, and then the wife's not happy and they get out. And in fact, you have that more and more, basically, as a phenomenon. So, and I think we need to communicate that to the public, because when we are attracting people to trading, they should know, and they ignore right now, in fact, the advantage that the big guys may have.
Actually, just to combine, and I'm going to come to
Sorry
you
for
on
being,
that. No, it's good, please. You can really stop each other if you like.
Right.
So what you're saying is, on your comment on, the markets are zero-sum game, true for short periods of time and to some markets, but when you talk about equities, for example, if the economy grows, there was an ad for a bank which is bankrupt now. The guy was playing pools and he was laughing. We all can win at the same time. I think in a growing economy we can really, but it may not be true for trading. I agree with you, because especially in the leverage market, it's really a zero-sum game. Then should the retail clients be more institutionalized, or your robo-advisor company, I think, the first step is really robo-advising and maybe disintermediation, or really try to commoditize, the lower-end servicing, the things that you can do provide with a computer. But can robo-advisor help also in trading, or that help could be as simple as don't touch this, don't touch the levered FX market, that sort of thing. Or, it can go and, specialize in giving some tips around trading as well for the retail investor on the street.
Yeah, absolutely. Robo-advisors, I see them as the facilitators of smart investing, let's say. Not only trading, but also investing. Because when we look at the financial literacy level or financial inclusion level of Turkish people, let's say, not the investors, as you call it, man on the street, is very low. And they have many behavioral biases or etc. Just like you said, don't touch this. it's a very good advice, by the way. Yeah, when the dollar is flying versus Turkish lira, people are trying to buy
because
dollars.
if it's a mathematical model and those numbers are correct, 80% or 99% losing 80% or more, any robo-advisor working on basic distribution model should give that advice, right? Because the model will be 99% right, I guess.
So I was going to say,
that's why that would be the right advice.
You can just run a survey and ask institutional traders, would you still trade manually, and just check the results, basically.
You're right on that. So I just cut you.
No
okay.
No worries.
Let's go.
I mean, as I said, robo-advisor is a facilitator between institutional investors and the average man on the street, because there are many house views in place right now, and people are portfolio managers are managing their funds with respect to those house views. But I mean, giving those house views or transmitting those house views to the masses, I think that's going to be the key to the smart investing or trading for the mass clients, let's say. Because, for example, in the mutual fund space in Turkey, there are 3 million investors, but their access to investment advisory is very limited. Like, I don't know, close to 3,000 people only are clients of brokerage houses or portfolio management companies. The rest is buying their mutual funds through bank branches. And it's a question mark whether those guys working at the bank branches have this kind of professional investment advice.
I see.
So, yes, robo-advisory is going to be a big step to increase the financial inclusion and financial literacy in Turkey, but it's not going to be enough, I guess, because it's a more systematic, but to make it more customized, we need to use more AI and machine learning as well.
Okay. Now this brings this question to me. Well, actually, what's going to happen? Maybe we can, slowly start going into the future. So if we let machines decide, for retail investors, etc., and you just mentioned about profiling clients, etc., well, let me try to explain what I'm trying to ask. Maybe I will not be able to ask it, but, driverless cars, I don't know how many of you have read Homo Deus by Harari. He also has written Homo Sapiens. There he gives the analogy. Well, first of all, some of you may know, if half of the cars are human, half of them are computerized, then it's a chaos and the system collapses because it's problematic. But if everything is automated, then it's easier. Then the death ratio will fall down drastically, etc. But before really discussing that, this is the question being asked. What if you have your traffic jam showing map in your pocket? You're a human driver, and it gives you the situation as is. So you know that the first bridge is empty, the second bridge is clogged, so you take the first bridge. It says, what if the computer starts telling you, just forecasting that the first one will also get clogged by the time you reach there? It starts to really manage that, maybe have some go to the third. So let's map this to financial markets. Then can the algorithms be the grand manipulator, so to speak? So because you profile people, you know what they're gonna do. In fact, you may be front running, or you may be advertising intentionally or unintentionally for some investors to act in a certain way. Then how can you manage that? And also maybe we can step into what do you expect from a technology perspective to happen in the next 10 years? What jobs will be there? What jobs will not be there? But this time let's start from the reverse order, if you don't mind.
Yeah, sure. Okay. That's a A very difficult question, Albert, to answer right now because
Okay, shall I
it's
just
an-
reverse the
it's an
order?
unknown number. No, but I mean the algorithms are everywhere, but with the improvements in the machine learning space, I mean, so there's going to be a battle between the algorithms. So
Yeah.
they are going to be constantly learning from your data or your let's say your technology. So we are talking about the speed right now when we discuss HFT or etc. But when it comes to algorithms or artificial intelligence, then the next technology comes into play, where you deep dive into the data and how you use, I mean, machine learning technologies to process this data, and that's going to define how good are you in investing or trading or etc. So it's going to be a system that is constantly learning from its mistakes, let's say.
Okay. And there's also the feedback loops in play. You
Yeah.
know, that's also, well, it's chaotic in the mathematical sense, really. You know, it's a dynamic, very complicated system in a way. Xavier?
Yeah,
your
well, I
thoughts?
think part of what you described already exists. Okay, it's called the spoofing algos. Yeah.
Okay.
So this is already, machines are already in fact coming up with that. But generally the way they do it is, it's actually, these algorithms are designed by a human being. So a human being, for instance, is putting an order, I mean the machine is going to put an order in front of another algo to make the other algo believe that it's there, but it's really not there. And regulators have a hard time with this, like your colleague, your friends. I'm sure we not like this very much. But still this works, okay?
Yeah.
So what we have not seen yet, and might be the next step in my opinion, would be an AI coming back with this idea, because we speak about AI, but really we speak about expert systems right now. So we have systems which are good in a specific team, a specific area, but we don't have yet an artificial intelligence coming up with the idea of spoofing, okay? Which could come from the application of technologies we have seen, for instance, like the one developed by Google in a game of Go. As you know, Google is now the world master in the game of Go. If you apply this technology to trading, conceivably you might come to that. And if that's been applied today, I probably would not know, because they would not
Actually,
share this idea.
it could be considered or treated as a virus in the computers, right? You know, you can really manipulate the overall system by really
I can't
introducing
comment
some.
on
You're not going to do it. Well, I remember when I was a kid, my uncle, he used to trade FX using the beeper. And back then, the Turkish banks, well, I'm from İzmir, it's a relatively smaller city, the Turkish banks really get the information a bit late, and it was open to arbitrage. Now we're talking about, you know, nanoseconds and everything. It's really amazing, and it's within a lifetime. And hopefully I'm going to live longer, but it is really, you know, worth to see how it's going to change. And maybe...
Yeah. The first thing you mentioned about the cars actually also exists in the financial markets. If you have an algo, as you have said, and somebody may come with another algo that beats you. And then you have to come up with something that beats it also. So that's an endless game. That also says that there is no ultimate algo that can learn everything, that can do everything, or that can always win. So when we come to the intelligence side, actually the softwares and intelligence, artificial intelligence algorithms actually are trying to imitate how the people works. That's how actually Google has done by playing the Go game. It's the reinforcement learning. You have some rules, and without anything supervised, the system tries to learn by trying. But the people, also the small kids, learn by trying. They just do something, and you react to him, and he understands that that's good or bad. Actually, we do that with very small amount of data. But the softwares or the systems need large amount of data to do that. And I see that the financial markets, the data we obtain from the financial markets is huge, but still not adequate for that type of thing. So the one way to go to there is to understand how the financial markets operate and how the dynamics of the market, and simulate it. Simulated, let's say you have an instance of 3 months of a stock in equity markets in, let's say, in the Borsa Istanbul, and let's say you can just replicate 1 million instances of that evolution. And then your algorithm or your mechanism or learning system can learn from those 1 million instances that are simulated. They are not real, they are simulated, but they have the same attributes and they contain the same dynamics. I guess this is going to be one of the important points, especially in algorithms, in machine learning, so this is going to be making the machines more intelligent, and then they will start to learn the structured things. But we have a lot to go on the cognitive science. That's trying to understand what super thing has, come up with something out of the box.
Okay, so we need a cognitive revolution.
Yeah.
For the
It
AI
may
to be
come up.
properly.
Actually, the same brain is doing that. Actually, the same brain is doing that. But we have to understand the dynamics of that, how cognition is in place, and it's currently a philosophical thing also to study.
Yeah, the thing is, well, I'll take this from Nicholas Taleb. He says, well, the only places where you have the full probabilistic, sort of model working is either in the casino, or if you're playing, I don't know, chess or something like that. Well, the rule set is, it may be extensive. There may be billions, trillions of, different outcomes, but nevertheless, the rule set is, very tight. So you don't really model while playing the chess. There's an earthquake, and then, one of the things goes from one square to the other. You don't model that, for example. Or same with the casino, because it's a very well-defined set of rules, and then your models work perfectly well. So from a cognitive perspective, well, the way you describe AI, as you said, maybe there are expert systems, just trying to understand what happened in the past, etc. Maybe we'll never predict the, outliner events going forward. Okay, now my question is around this last one. Then maybe we can go to the audience. How many minutes do I have? Is anyone timing?
Zero.
Zero.
Okay, then I keep my question, but let's go to the audience for several, well, 2 or 3 questions, because we started late. So, but if minutes are tradable, I can trade it, with him. Yes, please.
Scott.
So the statistic on the 80% losing value, I think that was a paper by the French regulator,
AMF, yeah.
And so I think it is.
It's not the only one.
Yeah, it is a good paper and it is a good reference. But I believe that was just about what was happening in the FX community and not in equities. And I think that the FX boiler rooms, if you like, are very well experienced in knowing exactly which market segments to target for that sort of market. But I suppose the question coming out of that is, for robo-advisor and artificial intelligence, or let's say robo-advisor, I would say that's more geared towards the equity space than the FX space. And then the second thing, the AlphaGo Lisa Gold analogy is a very interesting one. I don't think any machine learning actually happened during that process. I think it was a lot of data analysis. But when you look at the rules and the terms of the game, Lisa Gold was a very lean, efficient man making moves in very limited time frames, exercising a lot of cognitive behaviour, bounded rationality in terms of dismissing events that are not relevant. Whereas AlphaGo had infinite resources in terms of processing power, energy. I think AlphaGo consumed a lot more energy than Lisa Gold did during that contest. So again, I would make the distinction between what is artificial intelligence and what is machine learning. Equities versus.
Okay, and now questions to you then.
Perhaps on the first point, you're right. The study of AMF was on FX, but it used for the study brokers who are clean. So in fact, it's a fair market. It took out of the equation The people who don't behave are really kind of the scammers, basically. So my guess is you would have the same results in probably equity trading, but we don't know that for a fact. To your second question, basically, yes, in fact, AlphaGo basically is using infinite amount of energy, but it's definitely the thing we are coming to, basically, in my opinion, actually. So that's the thing and we're not gonna know about it, because contrary to the retail world, we don't share our recipes. You know, sharing a trading idea with someone else is like sharing your toothbrush. We just don't do that.
Yeah. Well, in fact, you know, as far as I can see, in terms of democratization, you have the data available, but not the know-how. You know, it's still, in a way, the algorithms, they're not coming public as quickly as, you know, data becomes available. So have we answered your questions? Okay, thank you. Any other questions from the audience? And anything you want to add as a final note, but very short, if possible?
Yeah, we'd like to come back to just the machine learning. It's true that, I mean, as I said before, so far we haven't seen nothing yet. Because everybody's talking about AI, robo-advisors, and this kind of thing. But really we're talking about expert systems, applied statistics, actually, because I'm not even sure we can call it machine learning yet, basically. But we are definitely going there. So that's, we haven't seen anything yet.
Oh, that will be interesting. You know. Has anyone watched Black Mirror?
Of course.
That's you know, UK made, well, very scientific TV series. Anyway, you know, we don't have too much time. Okay, thank you very much then. Well, we can have discussions outside. Well, after the panel that will follow, it's again on another exciting subject, and it's crowdfunding. So if I can, you know, get you to the stage and we can.
Sure.
Thank you. Thank you, everybody.
Thank you.
Thank you. Very nice.
Thank you very much. Ağzınıza sağlık.
Thank you very much.
Thank you.